Good morning, members, and happy holidays. It's the last week of the year. Just had Christmas, New Year's just around the corner here, and of course, once that's done, then we're off into a new year and a new quarter. And one of the things that we have to think about is that the earnings are going to be coming out in 2 weeks, or at least start to come out in 2 weeks for the first quarter. So it's going to be an early one. It's going to hit fast. And a lot of times, as you turn into the new year, you'll get big movements up or down. So, one of the things we need to do is consider that this week prior to that week hitting us. As far as the markets, they continue the rally here. We're not getting any kind of pullback at this point. And the result of that is that this market, has done what we thought it would do, and that is it's got the Santa Claus rally going. Now, usually that's from just before Christmas until just after the New Year, so we may see a continuation of it this week. I kind of expect that, and you'll see that below. Good numbers overall on the year, and good numbers this week. Now, the thing I would point out is that the Russell outperformed again, and in fact, the Russell has now made new highs on the year, and that's actually another theme we should be considering as we go forward here. Let's look at the fundamentals and the technicals, and kind of consider what's happened here. This rally continues to push higher, and you can see it across the board. And primarily, the things to me that look most interesting is you've got a breakout finally here on the NASDAQ composite. That's over the highs, or at least over this high, the 47.93. It's going after the 48.10 and should try to get over it this week. If I look forward to the Index is pushing up to that breakdown bar, gets over it finally. I'd like to see it stay over the breakdown bar, at least another bar, and try to take out the highs. The high here, 43.20, that top 43.14 was the close. So again, both of those pushing right up to the highs. Look like they're going to try to take them out next week. And then of course the powerhouse of late has been the Russell, the small caps, and the small caps just pushed up higher. You got a breakout here of a swing point that you can't see. If you bring it over, though, you can see that it's actually broken this high at 12.13 and this high at 12.82. The close here at 12.15 gets over both of them. So all the indexes, with the exception of the Index, at this point have broken out, and they've done it in such a way that is quite positive. In other words, we're getting that push right here at the end of the year into the beginning of the next year, and that is, from my perspective at least, a big positive. If I look on the negative side and say, okay, what not so much on the negative side, but what has happened, I guess in some ways it's negative, in some ways it's actually positive this week, is the commodities are making new lows. And when I look down here at the negatives, some of these commodities are starting to break down even farther. So let's take a look at that. Here's the JJC, which is the copper. And the reason I always look at commodities is commodities are base resources, right? And they get used in things. And if we look at copper, copper gets used in a lot of stuff. Oil does too, and we've been focused on oil the last couple of weeks. But here's copper breaking down. Another new break on a swing point low. You can see the follow through taking place here. You got a break here on this swing point low, gets underneath this one, comes back up, does a retest, and now it's regenerating lower. That's not a good sign. And if I look at it on the monthly chart, it just keeps dripping lower and lower. You got a break here, that was multiple swing points, and you're getting the 2 to 3 bars follow through. So I don't see commodities really lifting that much anytime soon. If I look at another industrial one, here's silver. If I look at silver on the daily chart, still here in this range. But if I pull this out and look a little bit longer term, here's silver on a weekly hanging at the lows. If I look at it on a monthly basis, silver's also pushing at the lows, trying to go down here and break out the lowest of the lows. It got the 2 to 3 bars already. Maybe this one's going to turn here at some point. But in general, commodities in general are not looking so good. And if I flip over to the big one, which is oil, here's the weekly on oil. Still hasn't tested, the daily, still hasn't tested the lows. If I look at it on the weekly, just pushing lower, still hasn't been able to rebound yet. No kind of signal turnaround. On the monthly, here's the 2 to 3 bars. You've had the break here, 1 bar follow through already. You can expect 2 to 3 bars usually, so that says that oil probably is not going to lift that much. If anything, goes sideways to some extent over the next month or so. And so from a longer term perspective, don't expect oil to be bouncing and rallying back to the top side. Now in a way that's good, but in another way that's bad, and that is because it's going to continue to put pressure on certain sectors in this market. So if we flip down to the negatives, right, XLE is doing a short-term retest regen, and I'll pop to that here in a second. And that's going to continue to be an issue for this market. Before I go there, let me finish with the dollar, because the dollar has made new highs and is hanging at the new highs. As we get into the first week of the new year, which is 7-8 trading sessions away now, the ECB is going to have to decide what they're going to do about quantitative easing. And I suspect this market, well, it's not even suspecting, this market is expecting them to do something, because you can see the euro at lows. And so there's a lot going to happen that first week of the new year. First of all, you're going to have the new year coming in. That usually leads to portfolio managers starting to reposition however they expect to. But you've got a huge, not issue, but you got a huge announcement that's going to take place on Thursday of that week, and that's the ECB. And so you're going to come out immediately, ECB, some more employment numbers, just a lot of data into next week, into this coming week. This Friday, you're going to get PMI numbers. So a lot of data is going to start to flow out starting the very beginning of the new year here, and then earnings right afterwards. So with all that backdrop, right, we have to be considerate of what could go wrong. And that, in a way, is what I have been talking about, doing, riding the Santa Claus rally up, and then positioning ourselves more safely out of individual stocks and more into just sectors and indexes. And actually, we're going to talk about that quite a bit. As far as what else was negative last week, the Biotechs. If I pop over here and bring up the Biotechs, and let me get the sectors up right quick. The Biotechs took a big hit, and they did it all at the beginning of the week. This is the daily, so they did it at the beginning of the week. Big plunge down. It was down 4.6% that day, 2.5% the day before, so you dropped about 7.5%. And then they rally straight back. And as in the portfolio, we actually bought into this. But now look at what it's doing. It's coming back to the breakdown bar, right to the top of it. So right in this area here, 309.94 is the number, and we're trading at 306. So another percent up. It's going to hit what should be a serious roadblock if in fact that pressure off of Gilead is going to continue to pressure this sector. So when I think about the sectors, indexes are doing great. They're all at highs. The only one that isn't is the NDX. When I look at the sectors, though, IBB could be a problem. When I look at the XLE, the XLB, there's some stretching going on. And when I look at the major sectors in general, and that's another negative here, is that even though all these indexes are new highs, the sectors aren't. They're right at the highs, but not at new highs. They're not pushing new highs. The only one that is utilities. And when I look at the utilities, well, I take that back. There's actually another one, and that's the consumer discretionary. But when I look at the utilities, is why is the safety sector the one that's pushing everything higher? Now, mind you, this doesn't have much overall weighting in the S&P, and so it doesn't help that much. But it's just odd that you'd have, quote unquote, the safest of sectors being the one pushing the hardest all year long to the upside. Huge anomaly, but again, this is a market of anomalies, right? It's because of all the distortions out of the Federal Reserve and the central banks around the world, in my opinion. On the positive side, we can look to the index as being at new highs. The MTTFs are not stretched at all. I mean, if I just pull over, well, I'm not even going to pull them over, but they just turned, right? So on the weeklies, on the dailies, they're not stretched. And so you've got that. You've got these large ABCD structures that are in place that we talked about last week. Let me pull those up right quick. I'll just bring up the S&P as an example. And you've got this structure here. It was to there, back down to this low, right? And now back up. And so it's a large ABCD structure. It's more easily seen if we look at it on the weekly. It's a little cleaner to see it. And so if we do it here, it's very obvious that you've got this ABCD structure in place, and it's on both the daily and the weekly. And that doesn't always line up that way, but they're that way now. And as you can see, we're stretching higher. So I would not be surprised to see us try to stretch higher. I just don't know what the new year is going to bring. And with a lot of data coming out that first week and then earnings following right afterwards, this market could just come running out of the gate, or it could take a quick dive before it moves higher on earnings. Earnings a lot of times will push higher off of lows or push lower off of highs. And so I think we have to, just realize we're at highs. And so the risk, if the risk is out there, the risk is to the downside. And I'm going to talk about that here in a second, just a bit more, because, that is going to be one of the larger issues that we have to address in terms of how we position going forward. The world market's holding in the ranges. There's really no fundamental data positive this past week. If we look at the fundamental negatives, I put a chart in here from FactSet, which is another one of those kind of, okay, how is the cash balances looking? And although they're inching higher here, and if I look at this, if you go back and just look at this is from 2008, right? Look at the cash balances that were back at these levels, right? Not much. Now look at them. Corporations have had huge runs in their cash balances. In other words, they're flush with cash. So that says that they're in good shape financially, right? They got a lot of cash on hand. Now, as they do that, right, one of the things that's been driving everything is these dividend and buybacks. That's what has pushed these indexes, more so the last couple of years, but even the last, 3 years, right? If you go back to here, from about 2011, 2010, 2011, the buybacks, the dividend increases, they really started to push this market, and that has continued. That trend is still up. I can't argue with the trend. All I can say is that, if anything, right, you had a nice trend here, then you got those spikes, and now it's kind of hanging here. And the question is are we going to see it roll back over and we don't get those kind of cash increases, or does it just level out, or am I wrong and this thing's going to go higher? Now, I'm thinking one of these two, and the reason for that is the world is not doing that well. From a fundamental perspective, the growth is not that heavy. The only place it's heavy or doing well here is in the States. Look at all those PMIs. Look at everything. China's slowing. Japan's not really doing much. Europe is struggling. The major areas of the world are struggling. The only one that isn't is us. And a lot of that has to do with consumer spending, the fact that oil's down. Consumers are spending more. We just saw that with the XLY. But are these cash balances going to continue? Are these companies going to be able to increase their bottom lines and have more cash? They usually do that through sales increases. I don't expect sales increases for the most part for most companies, especially for those that are overseas. And if that's true, this 11.9%, if we go back up here, 11.9% increases in dividends and stock buybacks. Where do you see that? Well, it doesn't happen here. It happens here, here, and here. That's where the money's going. They're making more money and they're buying back their own stock or giving it back to their investors. That's almost a net, right? If they don't increase these numbers and this number doesn't increase, then I don't expect, because I don't expect sales to increase much. I don't expect the market to be able to push up with the kind of force that it has the last 2 or 3 years. And so that's going to be important to watch that as that works forward. I was just saying everything's stagnant. I think first quarter earnings are potentially going to get hit on these large multinationals more than on the domestic. And what I'm talking about is all of these stand to get hit more, in particular the S&P and the Dow, than probably the Russell and to some extent the smaller NASDAQ stocks. Although the NASDAQ stocks are not small, they're large. But a lot of that is still domestic sales. What am I going to watch for the coming week? Let me pop back down here. Santa Claus rally, I expect it's probably going to grind higher, and I think that Index is going to make new highs, and probably the composite is going to get over that last high as well. Upcoming earnings, economics, really no earnings, economics very light until you get to Friday, and you're going to have a lot of PMIs come out on Friday. So that's going to be the new year. That's where we're going to see things happen. I think geopolitically, the risk of the Ukraine, if oil starts to collapse, that's going to be a huge risk. And I don't know if oil's going to collapse or not. I suspect it's going to hang down here for a while because it's already made a huge run lower. I think this is going to be a huge risk as we get out into March, April, May time frame. Weather gets warmer. That's when usually the activity starts to pick up, when there's unrest. And so I suspect if oil starts to push lower, if the growth doesn't pick up the demand and we keep producing as much oil as we are, that's where we're going to probably see the issues. And I'm going to talk more about that, as the year progresses, in that if you go back to 2007, 2008, we topped out in the financials in the housing market in September of 2007, but it wasn't a year later until we saw the crash. Now, I don't know that, this is the same situation, but it looks to me like we have topped out in the energy and potentially in the basic materials. And if those two are pre-running, right, if they're front-running a larger pullback in the whole market, then we can expect somewhere later this year that we may see that start to affect the rest of the market. That's a big theme. Longer term, I don't put a lot of weight on longer term thoughts, but it is something to consider and to think about as we go into this next year. So bottom line here, in terms of the next week or two, I expect this rally to continue, and if that push higher continues, the small caps, in my opinion, have the better chance of pushing higher. So in other words, if we get into the new year and this market does continue to run higher, I would expect that the small caps, right, the Russell 2000 is probably the place to be. Now, I don't know that it will continue, but if it does, that's where we want to be. So my suspicion is that that's one of the positions we want to keep going into the new year, right, because we're going to probably want to be weighted into just sectors and indexes for the most part, other than our core positions. And so that's one area on a trading basis that I would probably want to keep and cushion it with something else. Domestic strength is probably the only strength in the world right now, where the world's pretty much in stagnation, in my opinion. I expect that there are places that we can participate on the short side, in particularly with bonds and with the XLE. let me pop over here and just pull these up. Here's the bond market. As the bonds potentially do another ABCD structure to the downside, and I've already got this one in place, right, that didn't quite finish. That would have taken us a little bit lower, but now it's doing a little nested one potentially inside to get us back into this area. That's probably the area to buy the bonds. So that's one trade that's setting up. The other one is XLE. If I look at XLE, XLE is coming back and doing a full retest regen off this prior swing point low. If this can't get over and stay over this high, this is going to try to regenerate lower. Now we could get another week of hang in here, right, without being able to push up and potentially set up a move higher into the new year. But I suspect that depends on oil. And if I look at oil, I don't see oil making any kind of big run to the top side. Oil struggling here at the lows and just flattening out. If anything, oil looks like it's setting up to stay in this range for some extended period of time. And that range is right there. So now the best thing that could happen for oil is for it to test this low, fail, and then get a move back up. And I think that's a possibility near term, but longer term, you know, when we're talking a few weeks, I don't think oil is going to make a big move back to the top side. And if that's true, and if I pull this over and put it on a weekly, if it can't make a move back to the top side, you know, say more than 10% or something, the oil stocks themselves are going to languish. And if I go back, oops, let me get the right symbol here. If I go back to the XLE, and I have it on a weekly now, the XLE has this large, let me just highlight these as we go, has this large retest regen zone on a weekly. That could get it up to here, and you got another one now that's going to be nested lower inside of it. I expect this area here is going to be hard to get over, right? That's going to be difficult. And if that does push up into that area, that's probably the area to get short this sector. Now, yeah, it would be in a range trade on the daily, but a bearish trade on the weekly. So in other words, the daily could range for a while, and the weekly could have this large, you know, push up and down type stuff. The other option is that it fails here on this high and starts to roll back over. Now, having said all that, what's the trade? The trade's back over on the DUG, which is exact opposite of the XLE on a 2-to-1 basis. And right now, it's at a spot where one could take a small position as a hedge against their longs. And so what you're going to see me do this week is probably position that way with this as this, or using this as a hedge to the rest of the portfolio. Not large, but a starter. If we're wrong on the starter, then we'll have to look at it again lower. But I think this is a place that we could take a position and maybe see, you know, I mean, it wouldn't take a lot to get this to move 10%. You know, oil just drops, or oil hangs there, the XLE rolls back over. This thing could pop up 10% in a heartbeat, right? This thing's moving 4 or 5% a day. So this is not going to be an easy trade, and you're not going to want to make it big, and we won't. But I think it's a place that one could actually take some protection in case oil does roll over and start to affect the general market. And I think you have a good chance over time of making some money here. Now, the only thing I don't like, and what I would really like to see, is a 1-to-1 instead of a 2-to-1. I don't really like this ultra because this thing can, if we get a day after day move up in the XLE, this thing's going to get hit harder. So percentage-wise, it's going to get hit worse. But if we're holding enough longs, you know, we'll still be okay as long as we keep this small. So that's what we'll do. And I suspect we'll probably end up making some money on this. Let's pop over to, let me go back to this. So that's the idea here on the bottom line, portfolio-wise. I didn't highlight any of these other than ZLTQ. You can read through them. You know, in essence, what we did last week was we started taking profits. You know, we had a 20-something% profit here, a small profit there. We ended up with 6 or 7% there, and we basically broke even here. What are we doing? Reducing size into the new year. On the flip side of that, something happened with Gilead, right, that pushed this market down, and this market meaning the the biotechs, right? Push these biotechs down, which in my opinion gave us an opportunity, and that's why I jumped on that opportunity. And what I was looking at, and let me pull up Gilead right here. What I was looking at is Gilead was getting pushed down hard, right? Big spike down, and then a follow through day the day after. It got hit hard on pricing pressures of its hepatitis drug. That spread to the whole sector, even though the whole sector isn't showing pricing pressures. It's only here. Now, it may turn out that this is a one-off and only this stock gets hurt. But at the same time, I suspect what you're going to see is you're going to see this stock try to come back up, do a retest, and regenerate lower. That's off this bar. And, you know, I don't know if you've ever noticed, but so many times the swing point lows top will be a key area on the breakdown area. And if you look at this, that's the gap. I do not expect Gilead to trade back up here. I expect it maybe to get up here. If it does that, that's going to push other stocks in the sector back up. That's why we took a position in Biogen. Biogen still, from a volume perspective, still looks good. I think it can get right back to the top, 353. That's where we try to take some profits. Amgen, same thing. We were able to actually, Biogen we bought in a little bit early and didn't get the second buy. Amgen we actually caught almost the low here. And, oops, let me get Amgen up. I got the wrong chart. Amgen we caught almost at the low, and it's pushing right back to that high 165 area. We're going to try to take some profits and probably get that right at the beginning of this week. So Biotechs, they offered up an opportunity. We're going to probably, we're certainly on Amgen going to scale out and take a little bit of money. I like this chart. This may turn into something we keep longer term. I think it's probably the cream of the crop in the biotech area because it has great cash flow, and you know, they're just a solid a company that's been around the longest and have, you know, they have a great resume of products that they're selling. They just have less risk, in my opinion, and biotechs always move a lot. So this is one of the areas that maybe it might be the place that we stay and keep a biotech presence. But at the meantime, I don't expect these things to go back to their highs. More than likely, they're going to fail on the attempt to go back to the high. Now, Amgen may get back up to this high because you can see you got volume at that high. So we'll take a little bit off here. If it gets up there, we'll take off some more. If, on the other hand, we can't get the push up, you know, then, you know, past these breakdown bars, I expect Gilead will fail on its. These others, especially Amgen, may get over them. But we don't want to stick around here, especially with the Biogen. Even though I like the chart the way it's set up, we need to take profits as it moves up, especially with the new year coming in. So that's those charts. I wanted to spend just a little bit of time. That was the new positions and the opportunity. I want to spend a little time here talking about zeltiq. This has been a marvelous stock. You know, we were up percentage-wise. You know, the last one that we took off, I think we made something like 20%. Let me see where it was. No, it was 9%. We took one off in December 12th at 9%. But we've already got, you know, a large gain. We're up to 28 on Facebook, 43% on the one that we're holding right now. 43%, and that's we bought that at, let me find it here. We bought it on August, or 8/3. Let me bring up the weekly. So on August, right in here is where we bought it. That's a 40, and that was off the earnings, right? We caught it on that next week, and this thing has gone up almost 50%. That's going to retrace, and it's going to retrace at least into this high bar. That bar is 2704. So 2704. If I go back now to the daily, you know, this bar is the bar I'm looking at. In the top, there's 2652. As this comes back into this area, if it does, and I suspect it probably will, this is the area you want to try to buy back into. Now, I know that there's a zone here, and it may not get back down here, But I really want to see it come into this bar because that bar is probably going to hold it up into earnings, and when you probably get another push back up, and one could sell one more time before earnings. So that's kind of the play here. As this fades in, if it does, try to pick some up back in this area and get one more push before earnings takes place. And that's a large percentage, right? I mean, you can make 10% on this thing in a short period of time in front of earnings. Okay, folks, that's it for today. That's the portfolio. This portfolio, we're thinning it out. We're at about 59% invested right now. I suspect by the time this week is over, we'll be down to about 45, 50, and we may be with, sitting with a little bit of a hedge, particularly in Doug, but also potentially in the TLT if it comes back. Have yourself a great holidays. Be safe, and let's look forward to the beginning of another new year. I hope that I can continue to help you. If there's anything I can do, drop me an email. I'm very responsive to all of you. Your questions, your thoughts, your suggestions, I appreciate them. And if there's anything I can do to personally help you, just let me know, and I'll do my best. Have a great one. Take care. Goodbye.